Hello and welcome all viewers again to another video on REITs by reitspro.com. My name is Gaurav Jain and I would present this video today. I'm an author and trainer, and you can buy a copy of one of these books online as well and get more in-depth study of REITs and invits as well as real estate financial analysis. So today's topic is the recent IPO by Nexus, and it's called the Nexus Select Trust REIT, and it's been floated by Blackstone, which has already floated the Embassy and Mindspace REIT earlier, and these are the tentative dates. In fact, the issue is just closed on May 11th, and you should be able to get the listing date on May 19th. So this video there is a little background we'll do on what the issue is all about for those who are a little unaware about it, and then there is an analysis where you would probably be able to decide about how good this is for you or not. Now, you could buy REIT units. Either you could have bought it in the primary market during the IPO when the IPO was there. If you might have some of you might have applied there, or you can buy it in the secondary market as a single unit, like in all REITs here. It's the first retail mall in the country. These are called UCCs, or urban consumption centers, and it has 17 malls in 14 cities, 3,000 stores and 1,000 brands. That's the USP. And apart from that, it's a 3,200 crore issue with a certain category of QIB NII, and this has been the 9th to 11th May has been the duration of the IPO being open. You could just pause here and see maybe the details of the issue. These are snapshots from HDFC Securities and ICICI Direct Analysis. And again, you could pause here and see the number of times it has been subscribed. It's the subscriptions of QIB and others, and there's a total of 5.45 times the issue has been. So it's been a good success. Now, we would actually like to do an analysis, and we'd like to compare. Although the Nexus IPO advertisement says that it does not have any industry peers because all existing trusts are in the commercial office sector. So but for an investor, normally one would compare with avenues, especially the REITs that are available. So we will take out a certain analysis and comparison in this video. So the parameters for our comparison would be these four. The first one being the IPO at a discount to NAV. So they say that the IPO is at 78% of the NAV value. The yields are about 8.25% per annum. The yields estimated, there's no guarantee of course in a REIT, but the estimated yields. And the third, that the asset base is around 20,000 crores with urban consumption centers, hotels and offices. So we'll analyze this asset base and the fact that there are multiple earning streams in a retail REIT. That's all. These are the four parameters on which we will evaluate. So the four parameters evaluation now goes this way. So now we have the IPO at a discount to NAV, and the IPO is at 78%. This is also stated in the advertisement documents that were there. So the floor price, at a floor price and a cap price, I'm just taking it as the cap price, the issue price being 100 rupees and 78% of the NAV. So it is stated to be at a discount of 22% to the NAV, the net asset value. I've explained, you can see the earlier videos and see what the NAV is all about in the earlier videos, what net asset value is. And the existing REIT market price in mid-May approximately, let's compare that, and let's do our comparison now with the existing REITs. So if you see Embassy REIT market value versus NAV, there is a market value of 312 rupees approximately mid-May, sorry, and the NAV declared last time was approximately 400, so it's 21% lower. Likewise, Mindspace is 13% lower and Brookfield is 20% lower. So the fact that it is 22% discount to NAV is quite in line with the existing REITs in the market. That's the point here. The second thing is that the yield is 8.25%. So that is actually a quarterly compounded yield. So it's actually about 8% per annum for non-quarterly at an issue price of 100. For post-tax, tax on 1/3 of 8% you need to take out. So they say that 2/3 is given out in a way that it's tax efficient. In our earlier videos we've explained what this tax efficiency, how it comes about. So 1/3 of 8% you tax at 30%, and the rest is approximately 7%, a little more than about 7% is the post-tax yield. How does this compare with the existing REITs? So Mindspace in the year 22-23 they have given a 21.71 rupees return on a today market value of 312. Likewise Mindspace at 19.1 and Brookfield at 20.3, and the market values are also here. So what's the post-tax? So the ballpark is that if we account for tax efficiency, then it's about 6 to 6.5% return. So here it scores a little more than what the existing REITs are. But mind you, this is what the past data is, and that's a future data. That's one thing. Okay, so now asset base is 20,000 crores of which consists of urban consumption centers, hotels and offices. So that's the asset basket. Now the next thing we talk about is the asset basket. So what are these? These are the three things here. Compare this to today's REITs that are there in the market. So it doesn't have the same portfolio of assets. In case of Indian REITs, we have Embassy, which came in April 19, Mindspace in 2020, and Brookfield in 2021. And this is the first retail REIT, so obviously there is no comparison in terms of the assets. And the I'm just showing a snapshot from the prospectus extracts of the IPO. And if you see, this is the total portfolio. And you can pause here and see that 9.18 is the UCCs that they talk about, 1.26 is the offices, and then there is a hotel also. So this is what the whole portfolio is about. And the existing REITs in fact have this kind of a breakup. So if you see Embassy, the commercial space is about 93%, and Mindspace, all these assets are there. These are all office spaces, which is very different from this REIT, the current REIT. Now how does that translate into earning? That's our next step. So in case of a mall or retail REITs, they, apart from the rental and the maintenance part, there is also something called the revenue sharing. So we all know what rental is, and there is always an escalation clause usually in the rentals, 12 to 15% escalation in say 3 years time, and there is a maintenance charge which every landlord takes, and obviously there is a certain amount of earnings here also. These two are very common in case of office REITs also. These elements are present, but there are two more elements called revenue sharing and marketing and advertisement revenues which are there. So what is revenue sharing? So typically what happens is, if the brand that it's in the mall and does very well, then apart from a fixed sum of money which is a rental, they also pay a share in the revenue which arises from more sales because of better performance. So a small part of their income also comes from revenue sharing. And then there is also marketing or advertisement expenses. So they have say hoardings or spaces which they give out on rent, and those spaces, hoarding spaces and advertisement spaces, are also fetching revenues for the REIT. And I'll just summarize all the points now, but before I just tell you that there is a WhatsApp group, and there's a link in the description of this video. Please click there. Do subscribe to the channel, and you can also give your comments on the comment section in this video. So let's go ahead with analyzing some finer points now about this REIT. So we've already discussed current yields, yield potential, and base, the asset base. Very briefly, I'll touch upon these three. I'll make a further video sometime on elaborating the other three, but briefly, what's the way forward now that you've already understood? I've already explained these three components in the green. So let's talk about the asset potential. So if you see the prospectus also has a book value which is about 89895 million rupees. Earlier, that's the book value, whereas now the fair value is much higher. So does that mean that the price that they purchased it and now they're selling it at much higher? Yes, but then that's what property is about. So you need, we need to assess how much the potential is. What is the asset potential? Of course, the asset potential also in case of a REIT comes from leverage, because the REITs can borrow money and take more assets, and right now there is the loan to value ratio is supposed to be less than 20% in this REIT, and SEBI legislation has a capping of 50%. So there is a lot of scope of taking these loans. And the third part is the free float. How much is the free float? So the Blackstone promoted REITs in India, there have been two earlier, is the third one, and Embassy REIT, they have done part exits. In case of Mindspace REIT, they have also done a full exit. So these are the unit holding patterns, and the market float and public holdings are given here, just to show what the promoters have. And Nexus REIT is about 151.5 CR units, and the IPO is for 3200 crore rupees. So accordingly, you know, about let's say about a small part of it, about 20% of it, is now the public float. Do write to us in the comment section, and do write to us at support@reitspro.com. Thank you for watching this video.